What's going on, investors? AK from Falvo here, and I got a portion of an interview to share with you that I did with my partner in Macroeconomics, Tyler. Now in this segment we talk about everything trade management. We go over my original process that I used to use to invest in growth stocks, and we talk about trailing stocks, profit taking, inflection points, exits, how your macro market view ties into the process, and even how emotions come into play. Really managing the trade once you're in it is one of the toughest things to do, and that's why I've transitioned from the old process into a more systematic process, which in this interview we also talk about. We discuss more about why I moved to a systematic strategy and all the benefits I've gotten from doing it. So watch this interview, and if you learn something, make sure you subscribe to this channel and hit that bell for notifications of future videos. This is only a part of the total interview, so I'll be releasing more parts in the future. Enjoy.
All right, so I guess you're in the trade now, and you got your risk defined and your position size defined. And so what happens from there? You just basically decide, you just wait for the trade to play out and hit your stop?
Yeah, so what I do from here is I let it run. As it keeps moving higher, the growth stocks will tend to consolidate. And as it consolidates, I'll set a new risk point.
Okay.
Where it breaks that level, then I'm going to exit.
So you have a trailing stop up, basically.
Yeah. And that's a bit discretionary.
Yeah. And so is there ever a point where you actually take your profits? Like, let's say some stock skyrockets and it's up, a huge amount. Are you ever taking profits, or are you always exiting the trade with a trailing stop?
So that's the toughest part, really. Usually it's with a trailing stop.
Okay.
I'm willing to put those profits on the line, but the trailing stop needs to be tight enough that you don't get, a round trip.
Yeah.
Which does happen sometimes. You could do it either way, because when these growth stocks fall, they fall really hard.
Yeah.
So if there's an inflection point that doesn't go your way, because it's all about expectations, right? For these growth stocks especially. So there's an earnings report where they don't impress people, then you'll see a drastic change in the trend.
Yeah,
a lot
massive hit.
Right. And they'll get hit hard fast, and you'll lose a lot of your profits.
Yeah.
You can do it either way, but I like to keep the trailing stop and then keep an eye on potential inflection points.
So now you mentioned that you were you did a little stint in macro, and you were really paying attention to that. Do you still use that currently in your process to manage trades? So let's say something in the macro world is going south, or you're not liking the way the macro is shaping up. Do you incorporate that into your process still, or are you try to just focus on your individual names?
For me, it's difficult to incorporate the macro into a specific trade, because what I always found tough about macro is the time frame, where you think something's going to happen, but you don't know if it's this year, next year.
Yeah.
So how do you really incorporate it into, say, a long equity strategy? Which is why when it comes to exiting, the thing with macro, if I used macro to exit, I'd be exiting a lot, way too soon.
Yeah, you'd be getting scared out from.
Oh, yeah. And what do they say about macro? It takes years to build up, and then it happens really fast.
Yeah.
But so I like to just stick with technicals when it comes to exiting.
Okay. And then I guess so as your trading's playing out, and you have profits and you have losses, obviously your account's moving up and down a lot, right? You're having nice upswings and then downswings as well. So what are you doing mentally to kind of weather the storm, so to speak? And I want to specifically ask you about both sides of that. So when you're on a hot streak, let's say you're on an upswing, and then also when you're on a downswing, like, what are your feelings, and then how do you control those feelings?
Yeah, so the main thing that I do is just stick to the process. Whether, no matter what's happening, is I got a set of rules, and the only thing I need to do is execute those rules.
Okay.
I try to make it simple, because those emotions, you can't really stop yourself from feeling them.
No.
If you feel like you have a hot hand and you want to bet more, I try not to let myself do that. Or same thing if, if the strategy is going through a rough period, I want to keep betting the same size. And I just want to stay to the same set of rules that I've been using, so that emotions are really taken out of it.
So you've definitely found that a more systematic approach to things has helped you with the emotional side, and you like to do less tinkering then when you're having upswings and downswings.
Which is why I've been moving more towards a completely systematic approach, which just defines momentum in these names, and it's just a rotation model where not even a trailing stop, position sizes are exactly the same, and then you really take out a lot of the discretionary. It's not discretionary at all anymore.
Yeah.
And you let the system run, and that's what I've really moved to.
Yeah, discretion is definitely a double-edged sword, because it can add value, but it can also subtract substantial value if you don't keep your emotions in check. And that sure as hell has happened to me. Betting less during a drawdown when I should have been just keeping the clip going forward, and then all of a sudden you're on smaller size when the strategy comes roaring back, and that always sucks. So okay, yeah, well, that makes a lot of sense to me. Staying more systematic and keeping your emotions in check that way.
The thing with discretionary, exactly what you said. And another thing I found is that when you go systematic, you become a lot more efficient. You know, like if you're discretionary, you need to really study a lot constantly and really try to get that feel. Sometimes you'll have it and sometimes you won't. Whereas, again, if you stick to systematic, it's a system that's running, that's back tested, it's worked before, should work again. And then it comes down to, can you just stick to execution?
Yeah, I think that definitely speaks to the next thing I wanted to go into, which is the amount of hours that your process takes per week or per month. Because I know, not everyone has the same amount of hours that they can pour into trading, right? If you're a professional and you're managing a fund, obviously you can do it for 60, 80 hours a week. But many people, are just, it's their side gig, like kind of like how your dad started, right? It's just it's their side thing, and they don't have 80 hours or 40 hours a week to do it. So how has your process changed over the years in terms of hours put in per week, and then where have you kind of settled into right now?
Yeah, so when I was originally doing the whole process that I explained just now was the older process that I was using when I was starting, but then as I've grown, I moved more to systematic. So back then it was spending hours every night, after work or whatever, just like every retail trader, studying. When you got to look through all those charts, you got to look at the fundamentals. It takes a lot, which is why we were talking about you only want 10 or less stocks in your portfolio, because how are you going to track more? You're going to run out of resources.
Yeah, you're not a huge firm with a research analyst.
You don't have an analyst working for you. And then so now if you can cut it down enough, which I've done, it should take like an hour a week in this new process that I'm using, because really all you're doing is rotating based off numbers.
Okay. So this is definitely something you could run in the background then on top of, something else. It doesn't have to be a 50-hour a week job for you to run your current process.
No. And that's what I've been moving towards, because the thing is, if it only takes an hour a week to run, you could have multiple systems, right? Then you get into a multi-strat portfolio and you're doing a lot of things like that. Where in my mind, I'm always obsessed with efficiency. That just makes the most sense to me, where that doesn't mean you can't keep reading and studying, which you should be doing. But the actual trading and action it keeps you away, so you're not stuck at your computer and you won't screw things up. Because for me personally, like that was my big problem too. Just you're at the computer too much and you want action.
You start trading too much and you whittle your account down.
I hope you enjoyed that. And if you're looking for more videos all about markets, then make sure you subscribe to this channel and hit that bell for notifications of future videos. We cover everything from stock market analysis to psychology tips to even trading strategies. So make sure you subscribe, and I'll see you in the next video. Stay fallible out there. Bye.